Hello, it's Tuesday, it's 2 o'clock, and it's episode 2 of Chat with Brandy. I hope you all had a wonderful week. I really had a great week. I just want to take this minute to just say thank you to everybody who watched my first episode last week and gave me positive feedback and constructive criticism and told me that, you know, I inspired them to get their paperwork organized and everything. Like, it was just awesome. It's been an awesome week. And if you missed that video, you can still check it out. You just go to my Facebook page, go to the videos tab, and it's right there. Especially if you're struggling with organizing your paperwork or you just need some tips, go check it out. So this week, we're gonna keep up with the frequently asked questions series. So this one, again, is one that affects a lot of us. We're gonna be talking about working from home. So whether you run your own business or you're an owner of you're a shareholder in a corporation that uses your home as its kind of main hub, or maybe you're employed by somebody else and they require you to work from home at least 50% of the time, this is gonna be relevant to you. So we're gonna talk about the pros, the cons, and that sweet, sweet tax deduction. Okay. So hopefully you can all see this. Okay. So pros. The number one pro of working from home is that you can work in your PJ pants. That is hands down the biggest pro. There's really no con on that side. Like that's just a pro. The second pro is work-life balance. So, you know, this can offer a lot of flexibility to people with small children, or if you're just looking for a lot more family time, you can run your errands during the day. There's been tons of studies that show that overall life satisfaction is greatly increased when you're working from home. So huge, huge pro. Cons, and tell me in the comments if any of you find this familiar. Mom, dad. Distractions, definitely. Even if you don't have kids, laundry, dishes, whatever, it's all there to distract you, take you away from your work, which can be a con, especially if you're not, you know, it just takes a level of self-discipline. It takes a level of motivation to keep it up when you're working from home. Pro is there's no commute. So that's cheap. That's, you know, you don't have to deal with the frustration of traffic. That's just an awesome pro. Cons, it can be lonely. If you're a social butterfly, you might miss out on the water cooler conversations and having coworkers. Pros, it's way cheaper. So if you're working from your home, you already have those expenses. You already have a mortgage. You already have those utilities. Typically, working from home doesn't really increase those expenses by too much. You might have, you know, an increased power bill or something like that, but overall, it's gonna be way cheaper than leasing an office. So a lot of people start out here for sure. Con can be that, and a lot of people have told me this, working from home was not for me because I found myself waking up in the middle of the night and going and doing work because I just can't put it down because it's still at home with me. So again, this kind of goes back to that being able to discipline yourself, being able to schedule out chunks of time that are for work or not, right? And the last pro here is the tax deduction. So this CRA offers us a great tax deduction for working at home, and we should all take advantage of it. So before I get too deep into this, I just want to preface this by saying that this does not replace professional tax advice. This is a guideline for you guys. I always recommend seeking out professional tax advice in regards to your specific situation, okay? All right, so the first one, I'm just going to check my notes quickly and make sure that I'm not missing anything that I want to talk about. Okay, no, so the first one, we're going to talk about people who are self-employed. So you have a sole proprietorship, okay? So the first thing we're gonna do is calculate what percentage of our home expenses, and we'll get into the specific expenses that you can deduct later, is gonna be deductible. So you're gonna take your entire living space, so not just the main floor, you're gonna count the basement if you've got livable space down there, your entire living space. So let's say it's 2,000 square feet. Then you take your total business space. Now that's gonna include your office space. That's going to include if you have, if you're selling products, especially storage space, and it's going to include if you have meeting space, like me, I meet clients in my home, in my living room. You kind of have to be careful about that one because, of course, for me, it's my living room. So, of course, I'm using it for personal use as well. So we might have to prorate that portion of it, okay? But generally, you've got your business space. You're going to divide it by your total living space. Let's say that looks like 15%. That's the percentage that we're going to apply to our home expenses. 10 to 15% is really common. especially if you only have a home office. I have seen up to about 40% for like a day home or something like that, but you really should be reasonable with this, because if Canada Revenue Agency sees that you're using, 30 or 40% and that's uncommon for your industry, that's going to be a red flag for them, okay? Okay, so deductible expenses. So rent or mortgage interest, so just the interest portion only, not the principal, property taxes, condo fees, utilities, and so this will contain all utilities, including like internet, telephone. The only thing that I don't usually include here is cable, because typically you're not using that for business unless maybe, again, you're a day home and you're using that in your programming, or maybe you have like a salon in your basement and you're allowing TVs in there. Like, that's the only thing I could think of there. Home insurance, and then repairs and maintenance. So repairs and maintenance you have to be careful about. There's kind of a lot of caveats here. So if it's a repair on a part of your home that really has nothing to do with your business, so going back to if it's not one of your business spaces. So for example, you fix a toilet and you pay whatever, $100 for that, and that's nothing to do with your business, that's not going to be deductible, not even 15%, okay? If it's a repair that affects the whole home, like let's say your furnace or your shingles, then you're going to deduct that at that percentage that you calculated. On the flip side, if it's a repair specifically to your business space, you're going to be able to claim that 100%. Now, the other issue that you need to be aware of when it comes to repairs and maintenance is a lot of people think, okay, well, I renovated my house this year, that's a repair. Not exactly. If it adds value to your house, that's a capital asset, and that needs to, we need to deduct that over a number of years. So we call that depreciation or amortization. So we'll get down to here. So again, if this is business equipment, this is something related to your business, we are going to claim depreciation on it. If it's your home, if it's just your entire building, I never recommend claiming depreciation, and it's because houses very rarely depreciate with time. So I don't want you to be stuck in a situation where you've been claiming depreciation for all these years, you go to sell the house sells for way higher than your depreciated value, and now you have all this capital gains to pay. That's just a bad situation. It's just, you don't want to do that, okay? Okay, so the same formula, the exact same formula applies if you're a shareholder of a corporation. So you're going to use the same calculation. You're going to use the same deductible expenses. The difference is that your corporation is a separate entity from you. So you have your corporation. It effectively rents the space from you. So we calculate out how much was that portion. That's how much the corporation pays you as the shareholder. So it gets to use that as a deduction. Now you're asking, okay, do I have to claim that rental income on my personal tax return? I mean, technically yes, but it's an in and out transaction. You receive the exact same amount of rent that it cost you to have that portion of your house rented out. So there is no taxable gain to you here, okay? Hope that makes sense. Probably not. If not, let me know. Okay, we are going, the other thing that I want to talk about is that if you are a sole proprietor or a corporation that is running a home-based business and you're in the city of Edmonton, you are required to have an appropriate business license, okay? I'll link the site later to apply for this or to look into it. And if you're not in Edmonton, please Google the business licenses in your city to make sure that you're in compliance there, okay? The other thing that I wanted to talk to you guys about was insurance. If you're running a business out of your home, regardless of whether you have people coming there or not, you need to let your insurance company know. Even if you're not concerned about contents, there's still a liability issue. And if there's a loss, even if it has nothing to do with your business, and the insurance company catches wind that you were running a business out of your home and not letting them know, they could completely deny the claim altogether based on that omission, okay? So that's important information. Also, the cost of the business license and any additional insurance rider, if you need a whole new policy, that's going to be completely deductible against your business income. So obviously hold on to those receipts. Okay, so the third type of person that would work from home, and this one is a little bit different, is you're an employee. You work for somebody else, but they require you to work from home at least 50% of the time, okay? So this is called employment expenses. This goes on a different form than anything else does. You are required to have your employer fill out a T2200 form and sign it every year. I will link a copy of this form for you so you can check it out. But let's say you have this form, they've said, yes, this employee needs to work at home 50% of the time or more, and then you can claim these deductions. So you still go off the same calculation, but they have very specific deductions that you can claim. Electricity, heat, and water, rent, but not mortgage insurance, repairs and maintenance with the same caveats as before. Insurance and property tax is only if you're a commission employee, okay? And then condo fees, and again, you just kind of have to be careful because lots of times the condo fees have, part of the fee is insurance, so you just have to make sure that you're only claiming that if you're a commission employee. Other would very often include internet and telephone, but if you wanted to deduct that, you would have to have your employer note that specifically on your T2200 form that they require you to pay for your own internet and telephone from your home office, okay? Oh, there is one other situation where you may be using your home to derive income, and that's if you're renting out a space in your home, like a room or a basement. However, this is a whole nother topic, and we will probably cover it in another video at another time. But if you have urgent questions on this, feel free to reach out to me. And I think that is pretty much it. I'm just going to check and see if there's any questions in the comments. Okay. No, we don't want to watch it. Okay, so we are going to wrap it up for this week. I hope you guys found this helpful, and thanks for tuning in. And if you think that somebody else in your family may find this helpful, then please share it. Have a wonderful week. We'll see you back here next week, Tuesday at 2.